Okay, good morning, everyone. Welcome to this latest webinar in Quantum's Building Financial Fortitude series. My name is James Ashton. I'm a financial journalist and author. I'm your chair for this morning's discussion. Today, we return to retail. Our webinar from the end of January, Has Christmas Killed the High Street, is still available on YouTube and Quantuma. This is very much the sequel, designed to be more future focused, how to reinvent the high street and leisure industries post-pandemic. It is Easter weekend, traditionally a great time for shopping, yet non-essential retail still remains closed until the 12th of April. As the face-to-face economy returns, what needs to change and what goes back to normal? How do we get there as government support and furlough comes off and landlords and retailers have some, shall we say, tough conversations? And in the longer term, do we see more leisure, more residential, more office space on the high street? A quick reminder, Building Financial Fortitude from Quantuma is aimed at both advisors and businesses alike. Please take a look at quantuma.com/fortitude for articles, videos, and details of all the events that provide insight into tackling what's going on in the economy right now. Please do send any questions as we go in the Q&A function, and I'll try to get through as many as possible before 10:30. And this morning, to keep you busy, we also have a live poll consisting of 4 questions. We'd be grateful if you had a look and click on those if you have a moment. There they go. And so to the panel. Very pleased this morning to have with us Laura Anita. She's retail editor of the Daily Telegraph, formerly of the Evening Standard and Sunday Times, and required reading on all things retail and leisure. Milton Guffog is the CEO of Retail Realizations. He's got a long track record of helping troubled retailers as a turnaround specialist, corporate finance advisor and consultant, and Benson's for Beds, Harvey's Furniture, Woolworths have all featured during his career. We welcome back James Powell. He's chairman of celebrity jeweler Thea Fennell and the Hurling and Polo fashion label, and Cruz, Aquascutum, Hackett. He knows his way around a lot of different retailers, and he is, of course, a senior advisor to Quantuma. Steve Sitkin is chair of the fashion law group at Fox Williams LLP. And finally, Simon Bonney, Quantuma's managing director for restructuring and insolvency. And Simon, I'll start with you. So we're thinking in the short term, first of all, before sort of future gazing, what's on the timeline? What are the milestones that we should watch out for when things will change, when we'll start to get back to normal?
Good morning. Yeah, as you said, James, I mean, 12th of April is the starting point, isn't it? When shops are allowed to open again. And 21st of June brings us what is theoretically business as usual, subject to what Boris has to say in the meantime. Probably the 2 further key deadlines are the 30th of June at present, when landlords are allowed to take action against tenants for recovery of rents, and also obviously 31st of October, which is the current planned end of the furlough scheme, albeit we hope that for a lot of retailers, they will have all hands back to the pump in terms of making sure that they're selling as many goods as possible by that time. But clearly there's a disconnect at the moment in terms of that back to business as usual for 9 days before the landlords can then take action. So I think those deadlines are likely to move. I think the landlord deadline may well move, and indeed we may well see further government decrees in terms of what they plan to do with landlords.
Yeah, because when we've talked about this before, it has been something of a moving feast. It's gone back and back. And I suppose it's important to say, you look at the next figures this morning, the idea that next they'll get back to pre-pandemic profits at some point during this financial year. It's a great positive to show that there is, real signs of strength in the retail industry, but not every retailer is next.
No, absolutely. And for a lot of retailers, they haven't had the capex available to be able to pivot their business, to change what they do, or to make use of online as much as they might do. And for a lot of businesses, one of the challenges will come in growth, in coming out of lockdown and the current closures. And from our side, we see a lot of businesses in more severe distress on the way out of the curve than when they're at the bottom of it.
Mm. Milton, let me come to you. There's obviously lots of conversations to be had and lots of restructurings. It's all going to be quite messy, isn't it?
Messy or very busy? Yeah.
One man's messy is another man's busy, I suppose.
Well, busy for me, messy for others, I guess. Yeah, we're expecting probably second quarter, just building on what Simon was saying, to third quarter, for things to become much more active. At the moment, talking to advisors, it's probably the quietest time most of the advisors have seen for some considerable many years. And I think that's a reflection of all the support that retailers and businesses are getting at the moment from the government. And I suppose cynically, in my view, it's just kicking the can around the yard at the moment.
It's interesting. It's waiting. You know, the calm before the storm. James, can I turn to you? If you're a retailer now, what's going on in your mind at the moment? Because I guess there's a sense of reopening, but there's also fear that support is going to drop away, and that there must be a need to think about, you know, jobs and costs in the next couple of years.
I think that thought process is already well down the tracks with any retail brand or business that is thinking with realism. They're still following on from what Milton has just said. There is a lack of realism out there because of the government support that's still in place. But on a pure mathematical accountancy review of businesses, many have already made their minds up which stores aren't going to open again. You see that more fundamentally on the high streets of rural communities than you do in the cities at this point in time, where you can see that the goods have been taken out of the shop, whitewashed, and they are not going to open again. I think the biggest change that's on the cards for most of the retailers is the fact that, do they have the cash available, capex, to pivot to the online percentage that businesses now have to move and transition towards? And that's the biggest issue in terms of a business's balance sheet and ability to change for tomorrow and for the next 5 or 10 years.
Yeah. Laura, you've written a lot about the inevitability of shrinkage. I mean, there are some huge retail footprints out there, and some of them seem a little, you know, historic and sort of from another time. Do you think the media will be cutting slack for those retailers who still have many hundreds, perhaps even thousands of jobs to come out?
Short answer is I'm afraid not. I think we've seen so many big administrations, and there's more to come, but both retail and leisure are big employers in this country, and a lot of the job losses, more often than not, will affect, as we all know, that they tend to be lower income households. They tend to be, especially with retail, predominantly women. And I think it's important that we do sort of chronicle those shifts and those numbers and sort of keep tabs on where will these jobs go? Will they continue to be in retail in another shape or form? Will they go to online? Will they go to grocery? So yeah, short answer is we'll continue to write about job losses as and when they come, even though I'd like to hope there'll be fewer of them this year.
But what about the sentiment? I suppose there is an inevitability to it. So do you, you know, give them the benefit of the doubt, if you like? I mean, like, I know you did a lot on John Lewis recently. I mean, these retailers are they just have too many people on their books, don't they?
They do, and it's a consequence of, obviously, like you said, this doesn't just happen over COVID. These are, some of them, traditional, very specific expansion decisions that were taken 10 years ago. We do have, the honest answer is, we do have too much retail space. We do have too many stores. We've continued to expand and expand and expand in the UK as the internet grew and grew and grew. So yes, some of it has to go, and with it, it's the jobs as well.
Well, thank goodness for warehouses, or you'd have nothing to write about. Steve, let me come to you. I'm interested to overlay your perspective on supply chain and perhaps Brexit onto the challenges for retail at the moment. I'm sure you've been glued to the Suez Canal for the last week.
I have been glued to the Suez Canal for the last week as a boat owner. Have I been in the same position? Not quite. Do I feel for the captain of the Ever Given? Oh, for sure, I feel for the captain. Supply chains are going to be affected. Supply chains are going to be affected, and that's, I think, also going to feed into retail costs. At the moment, FEUs, full equivalent units, the containers that make up the world's movement of goods. China to Northwest Europe, $11,000 to $9,000. Go back 24 months, around about $2,500. That cost has to go somewhere. It has to feed into the supply chain. It will lead to an increase in costs. That's going to be a problem for some retailers. Alongside that, as a result of the Ever Given, as a result of hundreds of ships going in both directions through the Suez Canal, they've been delayed. Their shipments will be delayed. There will be issues arising. Go on to Amazon and we're out of stock, or temporarily out of stock. What was being offered in terms of delivery, that will be delayed. And that will affect also some retailers' ability to compete against others.
I see. And so where would those costs, though, they will be swallowed by the retailers, or can they be pushed onto the consumer, you think? Because, you know, what we're seeing already is the consumer, a lot of consumers are sat on a lot of cash. You know, retail sales, when allowed, when permitted, 2.1% growth in February. There is a lot of pent-up demand for people to go spending. What you're saying is that money might not go quite as far as people think.
No, I'm not necessarily saying that, because you're right, there is a huge amount of pent-up demand, huge amount of savings locked away. I think that is going to be unleashed over the course of the spring and the summer. I think, however, what we will see is a significant uptick in inflation in relative terms.
Yeah. Okay, Simon, let's turn to landlords. What do you think the view among them is at the moment? They can't. There's a lot of debt in the system, and they can't really settle everything out, can they?
No, I think there's a lot of debt in the system, James, and to an extent, there's a lot of mistrust. Some of the headlines you're seeing and some of the challenges you're seeing on CVA processes, recent references to cram-downs, is this disconnect between the need of businesses to properly restructure and the feeling that businesses are taking advantage of a situation in order to reduce their costs and set their business on the right footing for making lots of profits going forwards. So you know, there's a long way to go with the landlord's difficulties at the moment. And as you say, there's a huge amount of debt that's built up. And for a lot of landlords, that's an unresolved issue. And for a lot of businesses, going back to some of the previous comments, there are a lot of heads being buried in sands, pending a change in legislation to see how this works.
Laura, you'll have written a lot on CVAs. Your view on the system as it stands, is it being abused? I mean, will it benefit from reform?
I think at this stage it would benefit from reform. I think that I've written about a couple of these that have been seen as contentious, where even before the pandemic, the retailers in question, some have argued that their financial position was not as precarious as in some other instances, and it's just become a mechanism to shut stores without too many questions being asked, really. So yeah, I don't think it should be readily available just as an option that just gets put on the table in terms of, oh, we could do this.
Milton, you've seen these from the different perspective. Do you agree with that?
Yeah, I do. I think there needs to be more clarity. I mean, the recent New Look court hearing, which the judgment's yet to come out, hopefully will result in clarity of what the position with the courts will be going forward. The lines have narrowed. CVA is an insolvency process, a vehicle, but it probably is seen to be being abused at the moment. Landlords feel beaten up.
I think, sorry, Milton, I think that I don't disagree with either of those comments. I think the practicality, though, is that they are a necessary tool. They may well be require some reform, but The challenge for any business who does have a lot of different creditors and a viable underlying business, but difficulties in the meantime, is how to marshal their creditors. And so it's this issue of taking a business which has a genuine need to restructure and undertaking that in the right way versus something which, as Laura said, may be seen by a lot to be a more cynical move, where actually, if the business didn't undertake the process, they could still be okay. They just wouldn't make as much money as they want to.
I suppose what's interesting in these negotiations, Simon, is the state and the states. Some of the state-controlled banks are going to be big creditors in the system, aren't they? They
are absolutely, and you know, one of the most contentious issues around landlords has been the valuation of their claims for the purposes of restructuring. What's going to skew things coming out of the pandemic is that whereas most of a landlord's claim historically was a contingent one on future rents, we've now crystallized probably up to 18 months rent of actual debt that will fall as part of their claim. So, you know, my expectation is that you will see a lot of support, a lot of weight being put on by government to help businesses restructure. But at the same time, for a private landlord who wants their money back, they hold a very different view.
Mm-hmm. So a question from Charles Russell: why don't retailers and property companies go back to turnover rents? And I suppose the answer is that they are doing. And in fact, the case that Milton references, the New Look Court case, this is a debate around whether New Look should be able to put, I think, 400 stores onto 2% turnover, 68 stores. They want to pay no rent for 3 years. They're saying that these changes are vital. So not surprisingly, a number of landlords are challenging this assertion. Steve, what do you think the high street looks like if we turn back, if we do have more turnover-based rents going forward?
What do I think?
Does this offer a stay of execution for stores that might otherwise be viewed as just simply unviable?
I think so. It's not pretty for landlords, however you look at it. It does go to the question as to stores being there almost for the sake of being there. Laura made a point earlier on, which I was going to make. For years, the UK has been over-retailed, and this will, to a degree, perpetuate it. Is it necessary? Good question. There have been reports about what Sports Direct are offering landlords in terms of, I think, a 10-year lease or 12-year lease for the first 6 or 5 years, no rent, no rate, nothing. If landlords are therefore able to pick up a rent by reference to turnover, I suspect many of them will grab it. In contrast, and it's interesting to see, Watches of Switzerland have been reported as taking, I think it's a 10-year lease of a unit at the Trafford Centre near where my offices are. They will be opening when retail reopens and the site is redeveloped. The redevelopment of the Broadgate Centre, they're taking a significant unit there. So they obviously see a future in in-store retail. But for many retailers, what was referred to as cloned high streets, that is just going to be perpetuated, arguably for not a very good reason.
James, what do the winners look like post-lockdown? Is it that balance between bricks and mortar and digital, or is it simply getting that bricks and mortar, the physical storefronts, far fewer of them in the footprint?
I think it's the latter, James. I think most businesses are looking at flagship stores in inverted commas, and certainly the proliferation you've seen of businesses opening up on every high street, and you can pick the same 4 or 5 retailers. That's finished with. Most retailers for tomorrow are looking at the fundamental store that gives the feeling, the touch, the sense, and the rest is online as quickly as they can get there. Yeah. Experiential as well.
Yeah. I mean, fewer John Lewis, fewer Thorntons, fewer Jessops, fewer Santander. Laura, you're going to say something?
Yes, I guess on that point, obviously there's been a lot of talk about online versus retail, and obviously, and the panelists I'm sure will know, a lot of the retailers I speak to time and time again stress it's not one against the other. So in terms of having the right store estate, and also I think what's really important is multi-channel sales are growing faster than online only sales, and that means that those technically online sales are supported by a store. And I think that's the very important thing for retailers to get right. How do you get to that point? And Next is I think obviously one of the retailers who have been doing it for a long time. So yeah, it
was helpful to have a catalogue to start with.
Yes, indeed.
Yeah. Nicola Gooch asks about the impact on PD rights. I think this is change of use, and what impact is that going to have on reopening and repurposing former stores and assets? Milton, what's your view on that?
Excuse me. Well, there's been legislation changed yesterday where new rules allow commercial premises in England to be converted into homes. So basically, the government are relaxing the planning laws so that you only have to have prior approval process. So they're conscious that 11,000 stores closed last year. It's going to be worse this year, according to LDC, at 18,000. So they understand that they need to do something.
Sorry, and will that have the desired effect? Do you think, James?
Yes, I think it will have the desired effect. I think the changes that are inevitable, we're not seeing enough from the government leading the change that needs to come to assist the new formatting of the high street. And I do believe that some of these, as Laura points out, these multifaceted retailers that Next are pursuing a profile along the same lines. Yeah. This is going to be the future. It's a far-fetched type of environment where they are collegiate with brands that add to the brand of their own.
Mm-hmm. And Steve, we've talked before about that multi-brand strategy. There seems to be the haves and the have-nots, the people, the Next and the Boohoo's who are building up that, whole variety of brands and the back office behind it.
Indeed, Next, Boohoo, M&S to a degree, they've been able to take advantage of the failures over the last 6 to 9 months, and good luck to them. What it will mean, I think, is that those who are not able to engage in that strategy, but which still have multiple retail units and a presence online, they're going to struggle. And I think there will be a widening gap for much of, fashion retail between the likes of Next, Boohoo, M&S to a degree on the one hand, and the indies on the other hand, because I think the indies will do well going forwards. But the people in the middle, they're going to struggle. And I think that is where the mess that Milton referred to earlier on, that's where the mess is going to occur. I guess I put it September quarter day. And that's when we will see something hit the aircon.
So that's a date for the diary. What will the date of that be? That's the end of September, is it?
You're asking a commercial lawyer property question. I think it's the 29th of September, but that's a guess on my part.
Well, I'll put that in the diary and remind you of that when it comes, Steve. So hopefully that will come. Well, not hopefully, but yeah, we'll see if that comes to fruition. James, on change of use, I suppose it's all very well having the legislation, but isn't a lot of how high streets respond to that down to how quickly and how open local government is to new ideas?
Absolutely. I think councils have to really think outside the box going forward. We've seen on many high streets before COVID kicked in, trying to perpetuate retail stores on the high street by giving grants, decals going in the windows to represent how a store might look. All of that is now finished with. And I think part of the change in some of the rural communities will be residential, going back to probably early 1900s to make a start. And then I think the opportunity, again, is going to be far better in the rural townships, where delicatessens restaurants will have more opportunity, athletic type of stores. On the cities, I think that's going to be far more difficult, just by the size of the stores that are being seen in the cities that are going through problematic change. So I think, along with workers in the cities and office space, such as you've seen with John Lewis changing I think the cities are going to offer a bigger problem, and governments really need to take this to the forefront of their thoughts. And as we discussed in the last webinar, nothing is forthcoming from the government in that. It seems to be, let's just kick it into the long grass. And as Stephen is absolutely correct, September is when I see the wall suddenly appearing.
And interestingly, look, we had high hopes for tax day. Of course, there was no business rates review. Online sales taxes is being kicked into autumn. What's the implication of that, Steve? Do you think that means that retailers have to make tougher decisions sooner?
I think retailers will be forced to make tougher decisions sooner. They'll be forced to by reference to their shareholders. They'll be forced to by reference to their duties as directors, so far as insolvency law is concerned. It's not a great position for them to be in. And I am also very much aligned to James's view. At the present time, the government is well behind the curve, and it needs to get in front of it. Otherwise, I fear the Chancellor is going to be in a position where, although he won't want to, he will be forced to provide further government support to the retail sector to try and create a breathing space for something to happen. But at the moment, government isn't there.
Laura, it seems, business rates has been talked about changing those for so long. Why do you think it is that's been pushed back and the online sales tax is so difficult to stick? Is it just successive governments much prefer to be closer to these big tech companies?
I actually think I just obviously separate the two. In terms of business rates, that's a nice revenue stream for the Treasury that they wanted to hold on forever, right? So they didn't want to no way abolish it. So put that to a side is, yes, it needs reform. Retailers have been complaining about it for a long time, so we have to do something about it, but we would still like to keep the money. So that's a business rates conversation. And then in terms of online sales tax, I genuinely think by they I mean officials and policymakers, are a bit overwhelmed about the complexity and the questions that such a tax would raise. Both on tech companies that you've mentioned, also on homegrown companies, ASOS, Boohoo. These are examples of incredible businesses that launched 15, 20 years ago that took advantage of a model that was there and sort of saw the online growth coming. And you sort of have to ask yourself, are we going to punish them? So it's finding the right balance to either introduce that tax, or I don't know, there's all sorts of other suggestions, like do you tax delivery? Do you tax all sales on the internet? So I think it's too complex and you can't rush it, right?
And then also, James, you have the American political effect on the scenario that Laura's just covered, and don't underestimate the effect of Biden saying it's not happening.
And just following on, James, from what the other James has just said and Laura's just said, the US government it has either announced that it is doing it or it's threatening to impose taxes, duties on goods coming from the UK to the United States if the UK proceeds down the road of putting an online tax on the major tech players, the Amazons, the Googles, the Facebooks. The government, there's no easy answer so far as the government is concerned, because if the government does proceed, those duties are imposed, they will hit the UK's luxury brand sector. We've already seen the luxury brand sector suffer, in my view, as a result of what I think is a short-sighted decision with regard to imposing VAT, taking off duty-free status, which I think is, if I'm right, I think that's one of the issues that someone's raised on a question. That's a short-sighted move in my mind.
Well, let's address that question, Steve, while you mention it, from Ashley Pugh. It's thoughts on the government's decision to stop the retail VAT scheme allowing foreign visitors to claim back VAT at airports. Yeah. I mean, this is clearly an issue for the West End and all tourist destinations. And actually, it's something that, you know, Sunak's been so user-friendly, and this is one thing he's really stood firm on.
He has stood firm on it, but it's not simply been a factor so far as the luxury goods retailers are concerned. The UK's luxury brand sector is very upset about what has happened. And to my mind, the Chancellor has not thought it through, and has not thought it through if, as I think will be the case, ultimately when travel is okay, we see tourists that might have come to the UK divert to other centres and take with them their spending power.
I think it's a very concerning decision, James, following on from what Stephen's just said. It really does make one wonder if the Chancellor really does understand anything about retail, imposing that situation on tourism and duty-free.
And it will also hit hospitality. Tourists, when they come to the UK, do not come simply to go into stores and buy things. They will spend money in restaurants, they will spend money in hotels, they will spend money enjoying themselves. The UK's hospitality sector and leisure sectors are also going to be hit as a result of a short-sighted decision by the Treasury.
Yeah, absolutely. I need to turn to some of the questions. Thank you for everyone that submitted something. Maybe this is one for Milton. So from Lee Sennett, just to dive back to CVAs, what kind of reforms might you suggest or might be sensible?
Well, from a retailer's point of view, I guess clarity on where the line in the sands are. You know, I'm not a lawyer, neither am I an IP, but I think there needs to be firmer lines like there used to be, and those lines certainly over the last couple of years have narrowed. Simon, I don't know specifically whether your view on actual reform.
Yeah, I think one of the keys to where you might see legislative change is around the difference between looking backwards and looking forwards. A CVA used to be a process where you had a problem historically, you had, you know, a huge amount of debt, you fix that problem, and your business then carries on in a new format, able to put those debts in a box and sort them out over a period of time. What's changed is that now CVAs are much more forward-looking as well as backward-looking in the way they're affecting businesses. And that's where people are seeing it as unfair, because you're not taking a business which is fundamentally sound and just fixing a problem that's accrued looking backwards. You're arguably taking a business which, without that restructuring, remains fundamentally unsound, with a forward-looking business plan. And so I think those changes may come around the extent to which CVAs can interfere with the future trade of a business versus its historical obligation.
And a question from Tony Groom, Simon, it could be one for you as well. The idea that insolvencies after the bottom of the last cycle, there were a lot of assets and debts being recycled to new owners. You know, he says this didn't really happen after the financial crisis of 2009 and 10. Will it change after the pandemic? Will we see more extend and pretend?
Well, yeah, I mean, we in our world, we've spoken a lot about zombie companies, and there is a great feeling that a lot of those still exist from 2008. The issue at the moment is that when you look at the historically low insolvencies, so I think let's say that we've got in the tank something like 7,000 or 8,000 insolvencies that we would have expected to see in a normal economy that haven't come through, and that's without any extra distress. Then the question will be how we come out of this and to what extent the government continues to support, legislates against landlords, continues furlough schemes, makes changes. You know, the levers of low interest rates, pressure on banks, we don't know, a lot of those have already been exhausted, but of course the government owns a huge amount of the debt by virtue of the C-bill scheme, the B-bill scheme, MRC. And so I do think there is a possibility that there will be a long lag of businesses which fundamentally aren't viable, which will be facilitated to continue for a good period yet.
Thank you. And another question, maybe for you, Steve. This is from Simon Calvert. Most of the discussion has talked about the transition of sales to online, but many retail e-commerce operations are struggling to make a profit. What effects will the squeeze on profitability be? Any sites, consolidation, loyalty, logistics, and fulfillment automation? There's a lot of investment needs making in the back end, I suppose.
A lot of investment does need making in the back end. Smaller retailers, I think, have underprovided so far as their online offering is concerned. That will lead to greater dominance by the major players. There isn't an easy answer to the lack of investment in years gone by. The point that Simon made in terms of we haven't seen the insolvencies that we might otherwise have expected. As I said before, there are a lot of zombies out there, and that's being perpetuated. Is it being perpetuated so that over a period of time the digestive system will do its trick and we will get to a better place, or is it simply storing up a bigger problem for sometime autumn, sometime during the winter?
Okay, Laura, to turn to the future a little bit, we're seeing a lot of articles and coverage at the moment saying it's all about go-kart tracks, zip wires, trampoline parks, and then I suppose on the other flank of this is the retailers who are really, really experiential. So it sounds all a bit space age, but isn't the risk that you're going to get a few of these, but you're also going to get quite a lot of ghost towns?
So I very much agree with that. Is the people who get it right and the people who have the money to invest will probably do it well, as it has always sort of been the case. And in terms of towns, like a sort of panelists would have all agreed earlier, is how do you address the town centre problem, where you had the anchors where people won't want to sort of come anymore. Now, obviously, there are all sorts of noises in terms of converting some of the space. We've seen that the journalists, the M&Ss, the Phoenix, but this is London specific, where they're thinking of repurposing space for office. Now, the way the argument goes, but it's too soon to tell, is because we're working more from home, will the bigger guys have smaller satellite offices in some of these town centres? And that perhaps might lead to a repurposing, reallocation of that space. So that's one. Housing, but that's, you have to go through all sorts of hoops and who will want to buy it. So I think that's,
so it remains to be seen, because work from home or work not quite in the town centre is I think all employers are working through this at the moment. And
exactly.
You know, PwC yesterday coming out and saying, well, you know, you don't really need to be in the office, but there is quite a I wouldn't call it a sinister undercurrent, but there was an implication that if you want to get on and have, you know, creative freedoms, you will come into the office and put your bag by the desk, your jacket on the back of the chair again.
Yeah, I think that's it. Different employers are taking different decisions. They're thinking about it, and until the dust sort of settles, and it might be, I don't know, a year from now, 2 years from now, who knows? We'll have to work through it. And mind you, they might, 6 months down the line, PwC might turn around and actually say, actually, we were wrong. We made the wrong call. People do actually want to be in. We're scrapping all of that. So
no, PwC never say they're wrong.
Wishful thinking from a journalist.
Yes, James, interested on this so this point about the future of the high street and the amusement parks, the zip wires and the trampoline park. Every time I go to a trampoline park, it's out on some, horrible, dusty industrial estate. I mean, out of town coming into the centre of town forgets about the need. There's a huge differential in rents here, isn't there?
Yes, indeed, and I think that's a main criteria for looking at what happens in the future. And I think there's also this: will there be a rush back to the cities, sponsored foremostly by office workers not working remotely? That's a big part of the change that one has to understand for city retail in any form going forward.
Oh.
And I also think that most of the change that we'll see in the next 9 to 12 months will be specifically looking at out of town for all the health reasons that go with it and all the green noises around the world. I think the cities are going to have a much bigger problem.
Mm-hmm. Yeah, no, good point. Thanks very much. I just turn back to questions. Milton, if I can put this one to you from Tom Pickering. He thinks that we are perhaps being a little bit tough on the government. Why are people blaming the government? Haven't they provided loads of support? Surely now is the time for retailers to take new action off their own back. How would you respond to that?
I think that the government have been very generous by protecting retailers. I think what's needed now is, rather than deal with the situation we're facing at this present moment in time, it's looking at the future and saying, what do we need to do to support one of the biggest employers in the UK? And, the first step was yesterday, apologies for my coughing fit, but, they've recognised that they need to ease planning laws to get rid of the bureaucracy and make it much easier to redevelop these empty sites that we're going to end up with in market towns. So I'm certainly not blaming the government. I think they've done a remarkable job in support. But I think now, rather than, for want of a better word, just knee-jerk and try and protect, I think what they need to do is look at the future. What is it? What packages do we need to be putting in place? Is it things around, business rates, which we've talked about? Is it things around the car parking charges in town centres and city centres? Is it things around, allowing it easy for customers to move around the towns and cities? All sorts of different things. I mean, there's been press about, helping to support retailers like he did with leisure. I'm not sure that's the solution. I think that's just, again, a quick fix. We need to look at longer term solutions.
Yeah. Laura, the Government Towns Fund, I think they talked about a 3.6 billion pot here, and Sunak seems to have handed out $1 billion to anyone in the north that voted for him last time around. But is that going to have a real, sorry, that's slightly cynical, but is that amount of money going to have real impact, do you think? Or is it just to get people thinking and talking?
Don't worry about this cynical question. I was prepared to give you a very cynical answer. So, I mean, just in terms of every sort of a party that's in power at some point will have a fund for the high street. We've been sort of reading about regeneration, high street dying since the 90s. So no surprises there. I do think if you think about the amount of investment that just one company would have to deploy to make a difference, that 3.6 billion is probably peanuts for a lot of companies. Now, the one thing that I would say, it might make a difference for some of the smaller guys. And we've mentioned earlier the independents. If the independents with one site or a couple, they use that in the right way, it'll probably be beneficial. Especially we've seen a lot of us staying more local, shopping more local. That might work. But I think it was about 100 towns that were meant to be aligned with the levelling up, so-called levelling up agenda. And the initial pool was about 500. So 100 is nothing, right? When you think about it. But you can't also just dismiss it either.
Thank you. And Steve, I mean, I'll come back to you. I mean, another point that Tom Pickering makes is that we have been living a lot more locally in the last year, and some stats from Kantar quoted by B. Aloco suggest that in the past 4 weeks, online grocery orders are dropping and shoppers are returning to bricks and mortar. I suppose some of the decision making that all of these retailers have to make is has the consumer changed forever?
Has the consumer changed forever? In the terms of the way in which we shop, my own view is for the next 12 months, we'll see a drop in the proportion of purchases made online to being made in store. So retailers who have...
That's interesting. So a swing back to how life used to be, really.
A swing back. It's not going to go back to, in my view, to the pre-pandemic, but it will swing back to a considerable extent. And I think that those institutions who decided not to back Deliveroo, on the contrary, those who decided to short Deliveroo, I think that they are going to do well as a result of shorting Deliveroo. And I think what we will see is a significant uptick in hospitality, a significant uptick in leisure. I think retailers will, in their in-store offerings, they will do well. The trick will be to maintain an attractiveness to the shopper. And the trick will be to maintain an attractiveness to the shopper, both local and in town centres. I actually believe that what we will see is people coming back to their offices. I'm sure that for all of us on...
And you're a case in point, Steve.
Well, I'm a case in point, but I'm sure that for all of those on this webinar, where we've worked in offices and we've gone into our office, we've gone to the coffee point, the water cooler, whatever it happens to be, and we've had a moan about our commute. I'd be surprised if anybody has not at one point had a moan about their commute. But actually, in a somewhat strange way, they are enjoying that moan. And they're missing that moan. They're missing the interaction of being with people. And however good Zoom, Teams, GoToMeet, whatever you want to use is, and it has been very good, it's not the same as actual physical interaction, being with people in an office environment, in a working environment generally. So I think we will see people move back over a period of time before possibly the government takes the restrictions off. And I think it will accelerate. And I think what we will see is people coming back. Will it be like it was before? No. Yeah. But is it going to replace what are the empty city centres that we now have? Yes, it will replace that.
Yeah, thank you. A question from Madhya Mushtaq, maybe for James. It's about how certain is the panel that retail will be fully open in June? What could cause another delay, and then what is the impact of that?
A good question. I think most retailers are primed and ready to open. Is there concern that they will be closed again? Most certainly, coming out of what's happening in Europe. And I think the panel and anyone listening to the webinar has to acknowledge that what's happening in Europe is really a huge threat to continued retail operation June forward.
Yeah, yeah. Milton, I wonder if you can talk a little, given your experience. Steve referred to some of the brands and the sectors that you know will prosper, can prosper on the high street going forward, and there's certainly brands like Hollywood Bold and lounges that have done very well over the last couple of years. Some of these formats, whether they're restaurants or retailer, I wrote down Byron Burger, they just don't expand very well, you know, outside the M25. What are private equity investors in particular looking for across what will be all this rubble? You're on mute. You're smiling when I said rubble, but you're on mute.
Well, a return on their money to start with.
A return, yeah, of course. So some things don't change.
Indeed. So I think businesses with growth potential, but real potential. So brands that have got international reach is particularly attractive to private equity, because, you know, if you look at recent purchases, there's been a lot more paid for the brand than there has been for the other assets of a business. So, you know, examples like Evans, the Australians paying £23 million just for the IP. Well, a year ago, you know, that wasn't even on people's radar as a value for a brand like that. So it's having international reach, which means they can expand internationally. No longer is the criteria when you're investing into retail to open loads of stores. That's all gone away. So now it's about how they can manage and invest in the routes to market, licensing, wholesale, online, and so forth.
So it's got to be exportable. It's got the people are investing with an international perspective. I mean, I put Byron down as an example. I mean, I saw Byron, you know, expand across the UK incredibly quickly. And I know you cannot charge £12 for a burger in Huddersfield. So, you know, maybe not all the private equity investors get that these things can't just be expanded out like, you know, it's not a cookie cutter, is it?
No, it's not. I think in the short term, there'll be nervousness around retail. It'll be seen toxic. So I think it will be probably a year, up to a year, to see things settle down before PE starts to put their feet back into the arena.
Yeah. Laura, what about this word experiential, which I've underlined a couple of times? I mean, it's as awful as omni-channel, but I mean, all of these retailers must be throwing all this stuff at you at the moment. Who's actually good at this? Who's making great use of their bricks and mortar, do you think?
I think I obviously have to think about pre-pandemic times. Although there have been lots of announcements. Obviously, I'll be going on a few store tours as soon as retail reopens, so I might have a better idea then. But it's the usual suspects that you'd expect. Selfridges have been doing a great job in London, for example, and I often think of them as how do you do that very well, and then also I think there are brands who just do retail well rather than experiential. And we've seen one of the new entrants, and that no one's been paying much attention to, and we've been writing about it at the Telegraph, which is Decathlon. So everyone's just scratching their head a bit, wondering who the hell are these guys? But if you've shopped in their stores, which I have, it's amazing. You go in for one item and you leave with 12. That's case in point of how you do retail well. So I think there are examples like this, and you just have to look left and right and accept that you do have to invest.
And you make that sound like, you know, IKEA a generation ago. It was almost a reinvention of the wheel, wasn't it? You had a, you know, the outsized trolley. I need that rug. I'm going to regret it when I get it home. But all of the stuff.
And also, I mean, it's also tech. I don't want to talk too much about Amazon Prime or Amazon Fresh. That they've reopened, but that tech, the till list, the walkout, that is interesting. That is important. It might show us what the shoppers want, or they might want to go with it. So is little incremental things like that might play an important part in how stores are run and will look like in the future. And then you've got pockets. That the one other example, and sorry to be very sort of London centric here, it's Cold Drop's yard. The way that was thought and built, I thought was very clever. Whether it was the right location, I still don't know about that in terms of footfall. That's a separate issue. But the curation of the stores, the fact that it's like offices, designers, and all sorts coming together, I think that's interesting, and more of what we'll see is the smaller brands interacting with the bigger brands. I don't know, events and all sorts of things.
Well, I think King's Cross was ahead of its time, because people will probably remember it had a go-kart track. It's quite a tatty one there, a long time ago, but not all of the district was so desirable at that point. Simon, we're just about to wrap up, but any further thoughts from you? Really interested in your view on what Steve said. It's about September quarter day. All this waiting and watching that Milton referred to, you know, we really will kick in. Things will kick in by September. We will know where we stand.
Until we don't. I mean, that's the big issue, isn't it? And James said it in terms of the nervousness about Europe. The problem with all of this is confidence, and you know, one of the reasons that the numbers are low in terms of insolvencies is not just because businesses have not had the pressure. It's because they've decided not to take action specifically until they understand what the future really looks like. And so whilst we have these deadlines now, we have September or October for furlough, we have June. No one is sitting here saying, right, we now understand what this looks like and we now understand what the map out is. We have this outline, but there isn't the confidence there to throw all your eggs into that one basket to plan it on it. And of course, you know, a lot of capex has already been spent winding up to come out of previous lockdowns and then finding ourselves back a step. So I think the one thing we can be certain of is uncertainty, and concerns about where we will genuinely end in terms of being able to say retail is truly open for business.
Yeah. James, you agree with that? Lots of uncertainty, but then, you know, people have been in retail for a while. I mean, they thrive on uncertainty, don't they? They thrive on trying to, you know, guess which way the consumer's going to go.
Yes, they do. But I think Simon's point is well made, finishing on uncertainty. And retailers have had to concede and think so many times transitionally out of the box. This time, I think they've run out. Most retailers, James, have run out of answers and are sitting on their hands with cash flowing in through furlough, etc. And some of the chats that I've seen are asking, isn't it time that retailers, you know, did something for themselves? They're not prepared to right now because they don't know when the cash is going to stop, and they're holding on as long as they can.
Okay, thank you very much. Our poll is just about to close. If you haven't responded to that, please do so. And sadly, that's all we've got time for this morning. We hope you found that webinar useful. Please do join us for the next one. More information on what we'll discuss and when will be available very soon on quantuma.com/fortitude. And that's also the website where you can find all the details of the wider Building Financial Fortitude program. There's the plug for my books. Other books are available. Thank you for the panel who joined us today: Laura, Simon, Steve, Milton, and James. And of course, thank you to all of you for tuning in, asking questions and feeding back. Happy Easter and goodbye for now.